Welcome back to Focus Fridays, the series where we open up the playbook on real estate investing, covering everything from core fundamentals to sophisticated strategies that help our investors grow wealth and confidence. I'm Jared Shum, head of investor relations here at Focus Capital.
And I'm Chad Sheeler, founder of Focus Capital.
So today we're going to be talking about what is real estate investing and why should someone consider it. So Chad, let's jump right back into it. What is real estate investing, and in the simplest terms?
Yeah, I'd say simply, real estate investing is investing in real estate. So what does that entail? It's investing into either a building, a plot of land, an industrial complex, what have you, right? And earning cash flow from that, earning appreciation from that, tax benefits. It's just investing into this income-producing real estate, typically.
Mm-hmm. And so, what are the main ways that investors make money in real estate on high level terms?
Yeah, the main one is cash flow. Most investors have this thesis to invest for cash flow first and appreciation second.
Mm-hmm.
So they may earn cash flow from the income that produces after debt service and expenses. They may earn some appreciation as the market grows year over year. They may force the appreciation by adding value to it. They may also earn from doing refinance those proceeds at sale. There's different ways.
And are each of those ways, in your experience, different types of motivators to get into real estate investing for investors?
I would say most people that want to get into real estate, they get into real estate to try and offset their current living expenses, to hopefully get financially free, to earn some passive income on the side without doing a ton of extra work.
Gotcha.
So cash flow probably being the most common one, but long-term equity growth, net worth growth creation can be a large factor as well from real estate investing.
Okay, so I'm invested in public markets. I have some money in the stock market. So if someone is already investing in the stock market, what makes real estate worth adding to their portfolio?
Yeah, I think it's diversification from a broader sense, not diversifying as far as like picking this stock versus that stock on the stock market, right?
Mm-hmm.
But it's adding a non-correlated different asset type to your portfolio. Like you would go, maybe you add in foreign currency or add in gold or add in buying a business. Like they're all kind of different industry types.
Yeah.
But real estate has been really appealing the last few years for investors to maybe break off some of their portfolio investments and put it into real estate to have a little more control over it and know who the operator is behind it. Maybe it's to earn cash flow and greater tax benefits. Tax benefits are probably one of the most common ways these days that most investors want to look at real estate is for those reasons.
And when you say operator, what's an operator?
Operator being the person, the sponsor, the general partner, the company who's behind actually running those business plans.
Mm-hmm. And when you have an operator, is there always an operator that someone works with when they're in real estate investing, or can someone do their own like one-on-one? They have a single family home. Like, what are the different vehicles of real estate investing for someone who hasn't done it at all?
Yeah, that'd be really active versus passive. So actively is, okay, I go out and I go find a single family home and I buy it, I take care of it myself, manage it myself. That's active real estate investing.
Mm-hmm.
And passive real estate investing is more for the high income earner, the person that already has a great job, great income, great family and hobbies. They don't want those things go. They want to put some of their money to work in a vehicle that could provide the same benefits, but without them being a landlord full time.
Mm-hmm.
And the passive investing is where we help most people out. We see the most benefit from.
Gotcha. And so I feel like there's a misconception, and you can correct me if I'm wrong, that just because when you have a property manager, you have contractors and stuff, that's the definition of passive investing. Do you think that that's truly passive, or?
I think real estate is far from passive. Now, unless you're truly a limited partner in a deal, and that is a passive activity, passive investment, that truly is passive because they're doing zero work. They're now looking at deals, they're analyzing investments, but besides that, you're doing no work at all. But real estate has this, I'd say this common idea that it's just, you just buy a property and give it to a management company and you're hands off. It's all passive. It's far from that.
So you're saying that there's probably active, less active, or different active,
Yeah.
and then passive.
Go. Yeah, because very normally active would be somebody actually buys a property themselves and they manage it themselves.
Mm-hmm.
The next step, active, less active, would be they buy it themselves, but hire a PM company.
Mm-hmm.
So to give them oversight and manage the PM company, then it will be passive as well.
Gotcha. And so speaking of misconceptions, there are a lot of misconceptions about real estate investing. If there's one myth that you could erase, what would it be? Or demystify, if you will?
I think it'd just be what I just said about the active and passive.
Mhm.
People think it's always just a passive
Yeah.
investment, and it's not. I think that's why a lot of people actually look at passive investments that we've seen is they've done it actively for years and thought it would be this passive thing, and it's not, and they're tired of being a landlord. They're over it.
Mhm.
They look at, well, how can I now get the same benefits and do it passively, not actively?
Yeah. So you and I are big learners. We love listening to podcasts, audiobooks. We love reading. We love, learning everything we can about something that we're, hyper engaged about. Why should someone take the time to learn real estate investing, and who is real estate investing really right for?
That's a great question. I think why someone should take the time to learn real estate investing is if you're on this path to increase your income and net worth, there's going to be a point someday, maybe now already, where you're going to need those benefits from the tax benefits. You're going to want that extra passive income to create more revenue streams for your family. And that may lead to someday having more financial flexibility and time freedom, right? So that will be beneficial for a lot of people in this space. I think, what was the part of your question again?
Oh yeah, so let's say that they're already learning or interested in learning. Like we kind of talked about this in episode 0, but like, who is real estate investing really right for? Like, is there a persona or an archetype that you're like, this is not right for you, or is real estate investing right for everyone, but just at different stages?
Yeah, real estate investing, I'd say if I go back to like who it's not right for,
Hmm.
there's not many people that it's not right for, except for maybe the people that are very short-minded and want to have a quick flip kind of a deal, get in and get out really fast. But even then, like, yeah, you could do some wholesaling. You could actually make it it'd be a job though.
Hmm.
You could just be in the business of flipping houses, buy them, renovate them, and flip them. That's okay. But when it comes to passive investing, I think the person that wouldn't be a candidate for passive investing will be somebody who's got a really short timeline horizon there. It wouldn't be good for them.
Hmm.
But who's it right for? Everyone from high income earners to high paid sales professionals, business owners who want tax benefits that want to put their time into their own businesses and not go learn a new business, aka real estate landlording, right? People that are already in real estate, they can use tax benefits on their earned income.
Yeah. I think one of the biggest things that I've realized is that and we'll talk about this in the next episode a little bit more, but like, I think there are a lot of people that get analysis paralysis about real estate investing because there's so many misconceptions or myths and people that purposefully make it sound a lot more complicated than it is. It's not easy, but it's not as complicated as people make it because they have the scarcity mindset and they're trying to condense the market just because they want to, maximize profits for themselves. Is that something that you've seen in your day to day and your experience in real estate investing?
Yeah, I have. That makes sense a lot.
And when you have worked with your LPs, here at Focus Capital, what do you do to make sure that things are as simple as possible, communication is as effective as possible, and really educating our LPs as much as they want to know on these deals?
Yeah, that's been one thing we've noticed the bar was set very low at a few years ago, is that investor communication, investor reporting is just not happening very frequently at all for most people.
Hmm.
And we realized that a couple of years ago. And we report every month, email report. We report every quarter on a fuller package with financials, reporting, and then every year K1s obviously, and then distributions every quarter. But giving investors a constant, transparent look at how the properties are going is really important because not only do you build trust and credibility as you're building transparency,
Hmm.
and let's face it, real estate does not always go up and to the right every month.
Yeah.
It does not. There's challenges, right? So as an operator, you have to do your part to give them transparent reporting.
Yeah. So let's say that someone's listening to this podcast and they're like, okay, well, what's next? Like, what is the next step? What are some resources, other resources that they can look into outside of this podcast to educate themselves? And then B, once they feel educated enough to have that next step, ready to invest in a syndication or maybe even in their own property, what do those next steps in their journey look like?
I would say there's many other podcasts out there. I mean, for myself, I started reading Rich Dad Poor Dad, Robert Kiyosaki. That's a pretty common book for most real estate guys. I mean, books are great. I'm a very big audiobook guy. Other podcasts that were great when I first started doing this was Bigger Pockets. There's other ones now. So there's a lot of good resources out there that have good information. I think you just need to start there and learn the basics.
Yeah.
There's not a lot that has to be learned to learn how to be a good real estate investor from a passive perspective. From an active perspective, that's a little bit different, right? It takes a lot more learning, and really you learn by doing, which is making mistakes and learning again and again. In that regard, just, okay, you can go buy a property for yourself and just figure it out if you're going to do it actively. But I think this show is probably mostly geared towards passive investors that want to learn the passive route. And it shouldn't take a lot of episodes to learn that to be able to make a good decision.
For those of our listeners that didn't listen to episode 0, where you kind of gave a little bit of background on yourself personally and then how you started Focus Capital, can you kind of walk viewers and listeners through your journey from a non-real estate investor to a real estate investor, and then now the founder and president of a real estate investing group?
Yeah, definitely. I went through as a salesperson of a electronic payments industry for about 18 years. I did very well at that business, had a tax problem to solve back in 2017. Started reading Rich Dad Poor Dad, different books and podcasts, and over the course of 3 years, decided to apply myself and find my first rental property for myself to acquire. I bought a 4-unit building in 2021, and then went from there to buy a few assets myself with my own money. Decided to raise capital from other people beyond that point. Now, before that point in time, before I bought my first property myself, I actually did 3 limited partner investments to kind of learn just the basics without actually putting all the time in to manage the property myself. I did 3 development investments out in Phoenix, Arizona, and learned more about how it worked through those limited partner passive investments.
Yeah. And what was the catalyst or tipping point or like point in your journey that made you say, hey, I kind of want to do this, not as an LP or not as like a single operator. I want to be an operator and raise capital. What was that point, and what made you do that jump?
That jump really came from more of a personal challenge for myself, to be honest with you. Like, I did very well in my last business, but I wasn't really challenged anymore per se. There wasn't fulfillment as much as I had in the very beginning. And I saw real estate as a way to accomplish a lot of things in one. Like, I can accomplish my tax problem here, solve that, check the box, right?
Yeah.
I can go help out. We can help out 1,000 investors and their families. That's one of our missions here. I can go impact communities. So there's a lot more reasons for starting that business than just like financial or tax benefits. Hope that answered your question.
Yeah, it did. I think so. Getting a little bit more vulnerable, because something that we want to do on this podcast is like, because we're authentic people, we're transparent people, both in our personal lives and our professional lives. But it's not easy, and it's not always upwards and to the right in real estate investing. And so, when you were on your personal journey, what are some mistakes that you made early on that if you were mentoring somebody or you were advising somebody that was just getting into the real estate investing market, whether as a single operator or an LP going into a syndication, what are some mistakes that you made that you would hope that other people can learn from so they can start a couple steps ahead?
Man, I have a whole list. Let's do like the top 3. How about
Yeah.
that?
So what are the top 3?
Oh man, all right. So I would say, well, I've overpaid for a property before, but ended up being okay. It was a good deal. Probably the most resounding issue right now mistake that I made was I did not fully inspect the property initially. Therefore, I missed a lot of deferred maintenance in the property, and I could have retraded or negotiated down the sales price to account for the extra capital expenditures that I need to spend, and I had to spend those. Along with that, on the same property, I did not fully understand how to manage a contractor. And there was not proper guidelines set forth as far as like, okay, fund draws, inspections of work, verifying that he wasn't getting over his skis with the amount I've given to him compared to what work's been done so far. I was very new at this. This is my second deal I ever bought. And I lost about $40,000 to this contractor, this GC, just because of that reason. So that was painful there. I had a lender mistake one time to where what I thought was a fixed rate loan was actually a variable rate loan. It's my fault for not reading the loan documents properly. But I realized that when the loan started going up in cost and the interest rate went up in cost, so that was painful as well. But there's many more. There's many more around management as well.
Well, I guess the benefit of those learning experiences, like we can call mistakes or learning experiences, is that now you do those for your LPs. So people that have never been able to invest on their own because they might not know the nuances or ins and outs of real estate investing, but they know enough about real estate investing to know that's a good vehicle for their capital. Know that they can trust you, that those mistakes won't continuously be made because you made those mistakes with your own money in the beginning of your personal journey. I think kind of to close out, what are the things that LPs should consider whenever looking at other funds? And this is a much larger episode, but like, what are the top 3 things that why you should consider syndication versus just going out on your own?
The biggest thing is time. We can't buy more time.
Mm-hmm.
And as people get older and more successful in their journey financially, it shifts between when you're younger, it's like, I want more money, right?
Mm-hmm.
We have all the time in the world, not enough money. And then like, well, I have plenty of money. I want more time now.
Mm-hmm.
You can't buy more time.
Mm-hmm.
So the goal is always to go, the search now is to find more time, right?
Mm-hmm.
So by doing it actively in real estate, you bought yourself a second job, essentially. And if you've got little kids like I've got, or families and hobbies and friends and health and fitness and a business life, you have them more time. So the passive route really is ideal in that case to free them from extra landlording duties to do it actively, but still get the same kind of benefits.
So to bring it back to the top, our topic of this episode is what is real estate investing and why should you consider it? I think that we talked pretty in depth about what real estate investing is, and in future episodes we'll obviously deep dive into certain aspects of real estate investing, and we covered why people should consider it, and that basically everybody should consider it, but at different times and phases in their life. Are there any other outstanding comments or things that you feel like that our viewers or listeners should know, just kind of high level on this topic?
I think we covered it all, Jared. I really do. Like, covered a wide range of these topics, and we'll save the rest for the next 51 weeks.
Yeah, perfect. All right. Well, thanks so much for your time, Chad, and then we'll chat soon.
Awesome.
Thanks for listening to this week's episode of Focus Fridays. We release a new episode every week, so be sure to join us next Friday and beyond. If you'd like to see our next investment opportunity before it goes public, you can join our investor list by filling out the form on our website, focusedcapital.com. If you have any inquiries about what we've covered on our podcast, general real estate investing questions, or suggestions for the show, we'd love to hear from you. Feel free to reach out to us anytime by emailing us at investors@focusedcapital.com. Take care, and we'll see you next week.